Well, the effects of Jackson Hole's speeches over the weekend and Jerome Powell at the back end of last week continues to make itself felt across the markets. Two-year yields in the US hitting a 15-year high yesterday. And one of the big moves in the markets has been what's been happening with the foreign exchange markets. I want to begin with what's going on with the dollar basket. Here you can see in yesterday's session hitting a new intraday 20-year high for the dollar basket. In fact, the highest I think seen since the 10th of September. 2002, so very close to a 20-year high. Investors now gearing up for an extended period of aggressive interest rate hikes from around the world. Reducing inflation is likely to require a sustained period of below-trend growth, Jerome Powell said at the back end of last week, while higher interest rates, slower growth and softer labour market conditions will bring down inflation. They will also bring some pain to households and businesses. These are the unfortunate costs of reducing inflation, but a failure to restore price stability would mean far greater pain. The market now indicates a 75% chance the Fed will raise interest rates by 75 basis points come its September meeting. On Friday, that proportion was at 57%. Let's take a look at what's happening in other areas of the foreign exchange markets. And the way to trade that rise in the dollar basket is euro dollar, which is the majority in terms of weighting against the US dollar. We are trading around the parity level. The European Central Bank policymakers made the case for a large interest rate hike as well next month. Over the weekend at Jackson Hole, ECB board member Isabelle Schnabel, French Central Bank Chief Francois Villeroy de Galhau, and Latvian Central Bank Governor Martins Kazaks all argued for forceful or significant action. Under normal circumstances, this would see the euro dollar rise if it was just the European Central Bank, which is raising interest rates, but it's not. It's a question of seeing this policy continue to work its way out across all central banks, so all rising and all keeping the effects of the overall picture for the FX markets in place. Just a quick update on what Isabelle Schnabel said on Friday. Both the likelihood and cost of current high inflation becoming entrenched in expectations are uncomfortably high. In this environment, central banks need to act forcefully. Now, that was ECB board member Isabelle Schnabel over the weekend talking about the impact of what's going on inflation on central bank policy. Look at what's happening with sterling. Sterling on the way down against the US dollar, and in yesterday's session hitting lows not seen since those lows we had back at the darkest point of the early lockdown back in March 2020. That price target there, 114.11. If you're trading this, there's not much there stopping it now. Your stop would go above the 118 sort of area if you had a stop loss indicating potentially possibly lower lows here on the sterling trade as well. So you can see that many FX markets showing losses for currencies against that stronger US dollar. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.